All right, everybody. Stocks by the numbers. Welcome back. Wanted to do a quick update here of a company we looked at a while ago. It continues to slip down. I know a lot of people were interested in it. And of course, obviously, it's kind of heading in the wrong direction. Name of the company we're looking at is Luminar Technologies, ticker symbol LAZR, listed here on the NASDAQ. Stock is down now to $1.71 today, flat on the day as we see recent 52-week lows were hit at $1.63. Last time we looked at the stock was, I want to say, maybe like right around here after these earnings came out. Stock was about one full point higher than where we are now. So over about the last 5 months, we lost about another 35-40%. We can see these earnings that we looked at, the last update, we can see that the company missed big on the revenue side. And I said, in my opinion, to have a breakout out of this downward channel and really this long-term kind of dropping channel, we needed this company to come in and beat these estimates on the revenue side. And as you see, they missed by about 8% on the EPS side, missed by over 13% on the revenue side, missing by over 2.5 million. Now we fast forward as of late, earnings came out recently, the end of February. We can see the company missed on the EPS side again by almost 2%, and we can see that they missed on the revenue side again by over 7%. Now, granted, these numbers are a little bit higher. The company was able to come in above that 20 million mark. However, they missed again by about 1.7 million. So we have a company now that I said, in my opinion, from day one was essentially overvalued, which is why it's been in a downtrend basically since it's been trading public. And last time we looked at it at 274, I said that, in my opinion, to bring this company down to a valuation of 7 to 800 million market cap, in my opinion, would actually be 110% justified. And now, as you see, we have a market cap down here of 719 million. So, in my opinion, we're actually right on schedule here. And unfortunately, unless the company is able to turn this around themselves, then chances are it's probably going to continue to struggle. As you see here, the company was doing about 11 million, jumped up to the mid-teens, got almost to 17 million, now as of last quarter, 22 million. So again, I know people are talking about the backlog, saying that this revenue is going to be trickling in, and that's fine. So again, maybe much time down the road, maybe a year or two from now, this company maybe really will start benefiting from this backlog and from this revenue coming in. But as we see, to close out 2023, the company brought in less than 70 million and apparently lost almost $600 million to do so. And with that 70 million roughly, we're now trading over 10 times last year's revenue, which again was below par, right? It was subpar. So 10x on yearly revenue for a company that is consistently missing estimates and posting wider losses than Wall Street continuously expects. In my opinion, I think the bleeding is actually still going to continue. And I think that we may actually see almost 50% drop from here. I do think that they may potentially bring the stock down to the dollar and potentially sub-dollar levels. And if we cut that in half, again, that would bring us to about 85 cents a share from this mark, which would be, we'll call it 360 million market cap, which of course seems excessive. However, even at that mark, we're still trading a little over 5 times annual revenue from 2023. And again, a company that's losing 570 million to bring in 69 million, in my opinion, doesn't deserve to be trading 10, 15, 20 times annual revenue. So of course, we could have some sort of breakout, right? Because now we're in this downward consolidating channel again over the last several months. So of course, we could downward consolidate and then pop out, but in my opinion right now, first of all, we're below this bottom trend line. As you see, for the last couple of days, it actually dipped below it and then fought to get back above it. Now it's sitting basically right at that bottom trend line. So it's trying to get back inside that channel, which in my opinion, if it does, it will most likely continue to step down here, maybe into the 150s. If it doesn't completely break down, we may see about the 150 mark going into these next earnings, roughly the first week of May. Estimates again above that 20 million mark here of a touch over 21 million. Still expecting a loss of about 19 cents a share. However, now with the stock below, as you see, this is the daily, and you can see that the stock was up here earlier in the morning, had a big rejection down here to 163 and then rallied all the way back up to 174, getting back above that bottom trend line, and now recently rejected again as we sit here with about 45 minutes left to go before the close. You can see the stock down here now at $1.69 below this trend line. So it's going to be a little difficult to determine exactly where the stock can go. But here, even something like the 6-month chart here, looking at these fib levels, if this stock closes below this trend line again after these multiple rejections, I have a feeling that we may see this bottom fib here of 143 roughly. And again, in my opinion, I do think it would be justified. I really do. I laid out all my points, in my opinion, as to why this company is struggling. And I know that a lot of shareholders who may own this at $4, $5, $7 a share obviously don't like hearing this. They don't like seeing this. And I can appreciate your frustration because, again, I'm sure you thought that you were getting into, a great company at a decent price, and over the years everything would be great. And honestly, only time will tell, right? Where we can only really look at it more in the shorter term. We have no idea where the stock's going to be 3 or 5 years from now. However, we do know that as we approach that $1 mark, we're probably going to get that compliance letter from the NASDAQ, and then we're going to have to maybe potentially do a reverse stock split. And also, on top of all of this, as you see, apparently, there is a lawsuit taking place here. And as we see, the investigation concerns whether Luminar and certain of its officers and or directors have engaged in securities fraud or other unlawful business practices. On or around March 17th, 2023, media outlets reported that the semiconductor developer Lidwave had accused Luminar of attempting to pass off a Lidwave chip as Luminar's own technology after showing an image of the processor at a recent investor conference and in materials on its website threatening Luminar with legal action. Luminar subsequently removed the images in question from its investors' presentation and website. Well, let me tell you something. If this was something of mine and I put it on my website claiming it as it's mine, and then, someone comes out of left field and says, oh no, that's ours, you got to take it down. If I take it down, in my opinion, that would basically translate to acknowledging that it really wasn't mine. And obviously, that's a big red flag. I'm still on Steam. My apologies, Steam friend right there. But you understand what I'm saying? If it was mine, I would have left it. I would have said, you don't know what you're talking about. Stop messaging me with your nonsense. This is our IP. This is our processor. Boom, it's on the website. But for them to, again, receive this threat of legal action and then all of a sudden remove those images, in my opinion, I am personally viewing that as a big red flag. Not as something, quote unquote, to not be so worried about. So that's why I'm saying I have a feeling that the sell-off may continue. And, with news like this coming out, we could have short sellers just piling in just on this news. And again, they can force it down to these new lows in the 140s and maybe even 130s. But in my opinion, I actually think it's only a matter of time, again, before we see that dollar and potentially sub-dollar level. But let's see here. Yeah, on the news, it dropped. Yeah, okay. But yeah, in my opinion, that really didn't sound like good news at all. And the fact that, again, they kind of immediately remove those images, I'm viewing that as a red flag in my opinion. However, about a month ago, Luminar maintained at neutral at B of A. Luminar maintained at sell by Goldman. Neutral at Rosenblatt. So everyone's either neutral or bearish, it seems like. Here we go. We have a production delay. Shares tumbled 10%. Self-driving sensor missed estimates on delayed production schedule for Volvo cars. To prepare for the start of production for cars moved to 24 from the original scheduled 23 end. Production delay is likely to last until mid-24, right? Which is roughly 3 months from today. So in my opinion, again, we still aren't having any urgency right here in this moment. Volvo is targeting customer deliveries of the X90 in late 24. Quote, commercial progress has been slower than we expected, but certainly not only at Luminar, but within the auto tech ecosystem. Yes and no. Adoption of EVs has slowed, while analysts have said that the advanced driver assistance systems face, quote, largely negative sentiment due to autonomous program delays and cancellation. Yeah, I don't know. In my opinion, it just seems way too negative. It really does seem way too negative. These losses are extreme. Now you have this lawsuit. I mean, again, we don't know what's going to happen. We don't know what's going to happen. However, the company itself, as I've been saying months and months ago when we looked at it a couple of times, it's just the fact that they are losing way too much in comparison with how much they're bringing in, and the fact that essentially right out of the gate from day one, the stock was immensely overvalued. Which is why, again, I understand it could be viewed as all hindsight too. Oh, we didn't know going in. I can appreciate all of that. But this is why I say sometimes you're better off just remaining patient, in my opinion, giving these companies some time. Right? Give them some time. Let them actually build out their factories. Let them actually start producing their products. Let them actually start generating revenue and showing you growth, right? This is what bothers me. The fact that a stock comes out and people feel they need to own it immediately just because it's a tech stock, or they had to buy this one because of their connection to EVs. And as you see, again, like I said, from day one, this was essentially everyone had stimulus money. As you see, everyone had stimulus money. This was November 2020. And we immediately pumped the stock that, in my opinion, was overvalued at 10 to almost 50. And then we've been selling off for 3 years straight. So again, this is why I always say, in my opinion, you are much better off following the money, follow the revenue. And I understand, again, that the revenue is slowly ticking up here, not only year over year, but also quarterly here for the last couple of quarters. And they are kind of trying to get these losses narrowed here. As you see, on 11 million, the company lost about 1,300%. And now on 22 million, the company lost about half that, about 670%. But at the end of the day, as you see here, the losses widened drastically as the revenue went up. And we were kind of, as we look at the losses here, we were kind of trending upward with our growth in revenue. And now we jump up from 17 to 22 million, but you can see our net income here minus 134 million. And now making an extra couple of million, apparently it cost an extra 14 million in losses in comparison to what they did the quarter before. So honestly, in my opinion, I don't even know how to calculate these numbers to reach that break point for the stock itself, to where they're bringing in enough revenue to not have these massive losses and potentially break even. Because as I mentioned, even if this company starts bringing in 300 million for the quarter, if it's going to cost them $1 billion in losses to bring in 300 million, then what are we talking about? What are we doing here? So, in my opinion, I really see one of the only main positive outcomes here is that a larger company is able to scoop them up on a potential buyout just for their IP, and obviously just kind of utilize it themselves and make it a little bit more efficient, because right now this company is struggling seriously. And it's unfortunate, because I know, again, that a lot of you may be pumped about it, and I know every time I talked about it and I said, in my opinion, it was overvalued, it would go lower, it continued to go lower. So, of course, unfortunately, I was correct. I mean, I always strive to be correct, but in a situation like this, it means a lot of you may have lost money. So, to be honest, I'm not really happy about it. But, you know, every time I spoke about it, people would always tell, oh no, you got to give them some time, right? People would mention in the comment, oh no, you got to give them some time. They got a backlog, you know, in my opinion, this is going to be big. And again, several years down the road, anything can happen, right? We know this. We've seen this. But again, right now, in my opinion, just looking at some of these technicals, and now again, now recently you got these legal issues taking place. Again, in my opinion, I would not personally see any urgency to step in and accumulate shares at this level. Out of curiosity, let me look at the, what are we forecasting here? 21 million up to 25, then up to 32, 37. I don't know. I am not sure if the company can do that. As you see on the revenue side, missing 4 of the last 8 quarters. And again, with the current valuation, with the current losses, as I said, currently trading about 10 times last year's revenue right now. And they're hit and miss, and we have wide losses, so that this is what I mean. Even a situation like this, even if they post like 22 million next quarter and technically beat on the revenue side, as you see, there's a very, very high chance that they're probably going to miss and post wider losses on the EPS side. So that's what I'm saying. I just feel like, in my opinion, more of the story here is more on the negative red flag side as opposed to the potential green flags that could come down the road. And even if they do post 22, 23 million, in my opinion, for Q1 here, I still say the stock is overvalued at the current price. So that's why, again, I'm just kind of laying out, in my opinion, if they do happen to beat on revenue, there is a very good chance that they can miss on EPS, beating on EPS only 2 of the last 8 quarters. So that's why, even with a revenue beat in May, I believe, first week of May, we could still very well see the stock drop even lower. But right now, again, we've been in this downward channel, and just in the last couple of days, as you see, yeah, let me back it up a little bit. Yeah, you can see, going back to Thursday, the 14th, you can see it breaks the trend line. It tries to regain it. It tries to hold it. It breaks. And then going into Monday, you can see it had a rally and it ran up, got above the moving average and the bottom trend line, and then immediately rejected and retested and then broke back below the trend line. And now you can see Wednesday on the 20th, it tried to pop up and stayed very flat above the trend line, potentially signaling a small reversal and trying to potentially climb back to the middle of that range, in my opinion. But now, as you see, Friday, that just passed, the stock dropped down, back below the trend line, tried to rise up, rejected right there at the moving average and the trend line. And now you see Monday, of course, today, we had the big drop, rejection, trying to climb back up, getting right at the trend line, got above it for a little bit, and now recently rejected again here at $1.69. So that's why I'm saying this is a 1-month chart. You can see bottom fib there of 157. On the 3-month chart, bottom fib 162. And again, on the 6-month chart now, bottom fib 143. So in my opinion, with it now for so many days rejecting and trading below this bottom trend line, I actually have a feeling that it's going to potentially reject and actually break down and drop out of this channel and continue down to new lows. I really do personally believe that. Again, this is just my opinion. Let's switch over here to stock charts very quickly. I'll let you go. As you see, the RSI is down here at about 30.5, right? However, just as of late, as the stock was selling off, our RSI dipped into the 20s. And even back here, there were multiple times where the RSI had no problem breaking that 30 benchmark and continuing to stay down or even flat, and not necessarily having those rises that we see bouncing right off of that benchmark. So unfortunately, the RSI, in my opinion, isn't really a leading indicator, but in my opinion, is basically showing weakness, right? We can see here, going back the last, where are we? This is beginning 24. This was, yeah, so like December of 24, as you see, we were up, we were in like the 60s, approaching that 70 benchmark on the RSI. The stock was climbing up. It was trading at the top Bollinger Bands. Then we started chunking down, and basically since the ball dropped I feel like it lost a lot of momentum and it potentially lost a lot of attention. And as you see, the RSI slightly getting above that mid mark of 50 for a couple of times, but for the most part dropping back down and staying towards the lower end of the range. So this is why, in my opinion, I just feel like it's in the crosshairs now. I feel like it's under fire, and that's why I'm saying potentially from here we could see the 150s, the 140s making new lows. And even over the next couple of months, especially if it's another bad earnings report, I think we could see the low ones and potentially even that $1 range. As you see here, back about mid-February, the MACD crossed to the downside. It's been flattening out, potentially trying to curl up. But again, if we're consistently resisting this bottom trend line, then it's going to make more of a bearish case in the technicals, in my opinion, as opposed to a bullish case. What was the high today? 174. So yeah, we've been bouncing around. We have a very, very small candle here, it looks like, in my opinion. And we actually were at the top, obviously, 174. When I first looked at this stock, maybe about an hour and change ago, when it was at that price, you could have made the argument that if it closed there, it would have formed a bullish hammer, and it could have gained some momentum and maybe even gotten back to the $2 level, that mid-Bollinger Band level on the daily. But as you see, the stock ticked back down here, $1.69, currently down on the day. So unless we close at 174 or at new daily highs, then technically we're not going to make the bullish hammer, which obviously may not signal a reversal. Here on the weekly, very similar story here with the RSI. Look at this here. We can see RSI here on the weekly down at about 31.4. However, going all the way back to, looks like March of 23, on the weekly, the RSI has barely even broken above that mid benchmark of 50 and has essentially been down for weeks on end here into the 20s, excuse me. And then we had obviously a bounce up. We came back to retest that benchmark of 30. We had the bounce up, and now we're pulling back to around 30. And this is why this is a very unfortunate situation, because again, if you're looking at the technicals here and you're trying to like time this pop, you know, and you're looking to pile in here at $1.70, and then all of a sudden it's at like 187, 192, and you're able to flip it and make a nice quick little percentage gain, then of course, you know, it's entirely your own prerogative. If something like that works out for you, then by all means, go for it. On the flip side, I mean, if we're talking about an actual investment, I laid out, in my opinion, several reasons in the past as to why I would not be a shareholder of this stock, and the fact that I think it is going to get much worse in the short term before it gets better. And again, I'm not trying to pat myself on the back. This isn't really an I told you so speech, but I think we initially looked at the stock like over here at around $7 a share. And now it's at $1.60, you know, hitting new lows today. So, again, unfortunately, I got this one correct, but it does mean that a lot of people are upset and a lot of people ended up losing money. But, you know, like I always say, I understand it could be very emotional. It could be very stressful. You could start to doubt yourself. And the one main thing I would say is, again, in a situation like this, there's nothing wrong with these companies in their states of infancy, if you will. Oh, they're bringing in, you know, 6 million a quarter. Oh, now, you know, now we're up to 7-8 million. Like this company was doing. They brought in 11, right? And then like 14, and then 16, and 2 quarters ago was 17. Now last quarter was 20 million or whatever, 21 million. So there's nothing wrong with looking for companies that are, you know, bringing in 5, 10, 20 million a quarter. Just because they're only bringing in a couple of million, and we look at other stocks like Amazon who are bringing in several hundreds of billions, doesn't necessarily mean there's not money to be made and there's not value there, right? Look at a company like SoundHound, right? But SoundHound, a little bit of a different story, because obviously I understand they're in the AI space, but also they were consistently releasing positive news about new clients that they were signing. The losses are nowhere near what a company like Luminar is bringing to the table. And of course, you have the interest from NVIDIA, and now you hear them working with, you know, these automobiles out of Japan, right? So now we're branching into multiple different sectors, as I laid out. They're speculating potentially going into the healthcare sector as well, healthcare AI. So that's why very, very different situation. But yeah, something like Luminar, like I said, in my opinion, I would be wait and see. I would let the company start to beat these earnings, get these losses in check, actually start coming in line or potentially more narrow on these losses than Wall Street expected. And then when it finds its bottom and then when it has a fair value, in my opinion, you can consider taking a position. And that's pretty much it. So I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that these markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.